Hello, greetings. Welcome to Dividend Blasters. This is our 106th video. Topic today, wild. 4 months in. I'm going to talk about this ETF that I invested in when they launched. Back in June, I actually did a video on it, but today I'm going to go a little bit deeper, talk a little bit about their methodology and how they're doing. And I'll just cut to the chase. They're doing really very well after 4 months. First disclaimer, little housekeeping. What I say is not financial advice. This video is for information and education, reflects my own opinions, research, and experience as an independent investor for more than 30 years. So, do your own research and due diligence before making any major investment decisions. So, let's see how they're doing. How are they stacking up against other major investments? Well, you've seen this list before. I've shown it in the last couple of videos. You see that year to date total return, and remember, total return is price performance as well as distributions or dividends. Seagate Technologies year to date 197%, doing the best by far year to date out there. Palantir 147. Now, I'm not catching all of them, but I'm catching the big ones, the important ones. Major takeaway here is this: Wild is 93%. I have it in purple in the number 3 position. This is an ETF. This isn't a stock. This is an ETF. That is very unique. You don't see a lot of ETFs doing this. Usually, it's the moonshot stocks. But Wild is doing them is basically doing 93% total return. There is no distribution, so it's all price performance. Then you see the likes of Oracle, Super Micro, then precious metal, physical silver, 62.2%. I love physical silver. Physical silver is actually over $47 an ounce, flirting with $48 an ounce. It's quite remarkable. I own physical silver. I am happy as a clam. Taiwan Semiconductor, 47%. Then we have physical gold, and physical gold is, as I saw, is $3,880 an ounce, flirting with $3,900. I can't wait. I own quite a bit of physical gold as well. Got another video coming up on that, so stay tuned. But 47% year to date. Broadcom, the chip maker, a little under 47%. NVIDIA, the king of AI and chips, 40.69%, Netflix 30.43%, Google 30.21%, Monster Beverage 28.58%, Bitcoin 27.39%. So let me just clear this up. Bitcoin is by far the best performing asset over the last 10 years. It has a return of 45,000%. But year to date, it's 27%. Meta Platforms, 24.46%. Microsoft, 23.03%. Then we have the NASDAQ 100 index, 18.47%. Then the S&P 500, 14%. Tesla, 7.96%. Apple, 3.04%. Amazon.com, 1.38%. These are all wonderful investments. I actually own almost everything on this list with the exception of Monster Beverage. I actually don't have too much Meta anymore, and I don't have too much Tesla, but I have a lot of the other stuff. So anyway, the major takeaway, Wild, 93%. Why are they doing so well? How can an ETF do this? A little bit more background. Wild is managed by Vista Shares. And the name of this ETF, the full formal name is Vista Shares Animal Spirits Daily 2X Strategy ETF. Why is it called 2X Strategy? They offer a 2X or 2 times daily leveraged exposure to a basket of the most actively traded momentum driven stocks. Now, I think that's self-explanatory, but we're going to dig into that a little bit. But basically, there's 2 major takeaways. They have a unique methodology. They're rotating their holdings monthly, and they have leverage. They're using leverage. They're multiplying their exposure through leverage. Let's get into this a little bit. And let me also just kind of draw an analogy. Investing in Wild in this ETF is kind of similar to hiring somebody to do swing trades for you. That's kind of a way I look at it. They're basically rotating in, rotating out, momentum driven stocks. Um, every month, the stocks that have the highest trading volume, the stocks that are captivating the market, the stocks that investors, retail and institutional investors, are the most interested in. But they're moving them in and out. They want to capitalize on market movements. So the ETF itself is not trading stocks in and out every single day. They are rotating their holdings out monthly, but they're doing a daily rebalance. And this daily leverage rebalancing amplifies movements of their holdings. It can resemble the effect of frequent short term trades, but it's an automated process and it's a very well thought out, disciplined process. So, what are the 5 key holdings as of late? Currently, CoreWeave. We all know about CoreWeave. The major investor is NVIDIA, a partner, junior partner of NVIDIA. Coinbase, the crypto exchange. I actually own shares in both of those. Strategy, uh, used to be known as MicroStrategy, an IT firm. But really, they are known for their acquisition of actual Bitcoin on their balance sheet. Palantir. Well, Palantir is the darling and really a leader, if you will, in AI and data analytics. Lots of government contracts, Palantir, doing a hell of a job. And of course, NVIDIA. NVIDIA is, of course, at the epicenter of AI with their GPU chips. And I do own quite a bit of NVIDIA and Palantir. So anyway, and these are the September holdings. We'll see what the October ones are. I don't know if they've been announced. I'll check. It's only October 2nd. But you can see what they are in June, July, and August. And these are what I would call momentum driven stocks, the stocks that trade most heavily out in the market. And in June, it was Meta, Palantir, Supermicro, Tesla, Apple. July, Palantir again, Tesla, Hims and Hers, Google, and Apple. And these are in order, basically, of the weight, if you will, from top to bottom. In August, it was Apple, Hims and Hers, Tesla, Google, and Palantir. So, a little bit more about their methodology. They use a rules based approach, sentiment fueled process that selects 5 of the hottest stocks each month. I already touched on that. And they seek to amplify those returns during strong bullish trends. This is an ETF that performs very well in bull markets and really short term. And so that's why I was drawing the analogy to swing trading. They capitalize on surging interest in high volatility stocks, as I mentioned, favored by both retail and institutional traders. And here are some of the recent holdings. I already went through that. This is a special category of an ETF. It's not an index ETF. It is not a covered call ETF. It is a leveraged tactical trading ETF with a focus on momentum and sentiment driven equities. So the key components, it's a leveraged ETF. They use a 2x daily leverage, meaning they seek to deliver twice the daily performance of their targeted portfolio. So, guess what? If those holdings in a basket, those 5 holdings, deliver a 3% return on a day, they seek to deliver 6% through leverage. And then they do a rebalancing. The selection methodology focuses on the most actively traded high momentum stocks based on investor sentiment and trading volume. They rotate these things monthly to capture market trends. So this is not an investment that you would basically say, hey, I'm going to buy these stocks, these underlying stocks, and I'm going to trade them in and out every month if you're a buy and hold investor. But I do think that having this ETF is a great complement based on where you are in your journey, the size of how much you want to hold, to give you some extraordinary market returns. I'm not saying put everything you have in the underlying holdings or even in the ETF. Like I said, I have 50 shares. I may go up a little bit more, It's doing very well because we are in a bull market, and I've had it for 4 months, but I'm watching it. This is not a huge ETF. I think they have under $3 million assets under management. They have. This is a very innovative company, investment firm. They have. I want to say it's OMA that basically replicates Berkshire Hathaway. I think it's $500 million assets under management, which is a very different type of investment. This is more basically get those returns, capitalize on market momentum. That's really what this is. Let's dig a little deeper to explain what this ETF is. I did mention that it's tactical. It's a thematic and tactical ETF. They don't provide broad market exposure. They target a specific theme, animal spirits, momentum stocks, and they're targeting 5 every month. They're basically focusing on a short term bullish approach, and they're looking to optimize their risk. They have a high risk appetite, I think is a better way of saying it, for this ETF. It's suitable for traders seeking to capitalize on rapid market moves. So really, if you're more interested, if you're a swing trader, but you don't have the time to do swing trading, this is a great ETF for you, and you may want to buy more shares of this ETF. If you're close to retirement, I'd say, hey, I'm getting there, and I own it. But you might want to just say, hey, I'm going to have a little bit of this. I want to get those extra returns, and it's kind of exciting to see what these guys are doing. The ETF is generally not intended really for long-term buy and hold investors. You have your index funds for those. The folks that are closer to retirement, you have your covered call ETFs. This is more for getting that juice out of your investments. It's a tactical asset allocation type of an ETF. It's more risky, but there's more reward. So, we're in a bull market, so it's a strong bull market, so it's doing very well. But if we're not in a bull market, if we're in a volatile market, those returns, if they're downward, will be amplified. So I'm throwing that out there just so you know. We're going to talk a little bit more about the leverage. So the 2x daily leverage ETF, they aim to deliver double, I already talked about this, the daily return of the underlying portfolio. They use financial derivatives such as swaps and futures rather than owning the stocks directly. They actually used to own the stocks directly. They rotate them in and out. But just this past month, they have revised their methodology where they have a more really effective, efficient way of doing the stock rotation. I'm going to get to that in a little bit. So, and I already mentioned, so for instance, if the holdings that they have go up 3% in a day, they're seeking to basically return 6%. But if they drop 3%, the value of the ETF will fall 6%. So that's something to keep in mind. You'll never lose more than your investment, but you could lose your investment. I don't see that likely happening, but just, kind of a disclosure. I already talked a little bit about how the leverage is achieved through daily rebalancing. So the fund is basically resetting its exposure each day so that the next day's performance is always based on twice that day's moves. A little bit more about leverage. So for Vista shares, using these derivatives, and I already mentioned the swaps, it allows them to offer amplified returns without needing margin accounts or directly borrowing money. So they make it accessible as a regular ETF trade. So it's very efficient for Vista shares. And for us investors, this really opens the door for significantly higher potential returns during short-term uptrends. And we are in an uptrend right now. So what is the trade-off? And I already mentioned, if you're in a downturn, the losses are equally magnified. If you hold it for too long, the volatility or a downturn in the market could actually have something called volatility drag, and it can eat away at any gains that you've already earned. All right. So let's dig into the numbers. They closed today wild at 38.36 a share, Expense ratio is a little bit higher, 1.29%, but they're doing a little bit more for you. They're basically your little swing trader. And I can appreciate that. As I mentioned, the fund is not huge. The assets under management are about 2.79%. So it's for tactical trading, if you will. Um, so let's see how they are doing total return. I already mentioned that year to date, 93%. Absolutely head and shoulders above the S&P 500, 14%, beating the NASDAQ 100, which is 18.5%. So you're talking about a factor of 4 to 5 times better. But this approach is a little bit more focused. Again, this is momentum based. All right. How are they doing against leading tech stocks? Well, I already mentioned Seagate Technologies year to date is 197%. Palantir is 147. But look at Nvidia year to date, 40%. And I got to tell you that these tech stocks, they will do better uh, over the long term than these returns you're seeing right now. Much better over 10, 15, 20 years. We'll have to see how Wild will do. But again, Wild is really an investment vehicle for short-term surges in the market. And we've only had it for 4 months, and they're doing really well. Let's keep going. How is Wild doing against these alternative assets? Well, you remember the list I showed. I like to show these things graphically. So again, Wild 93%. Um, it's outperforming gold, which is 47% year to date, and silver 62.2%, and Bitcoin 27%. So year to date is basically back from January 1st. Wild is outperforming them. So the holdings. So and I'm looking at Seeking Alpha here, the holdings are basically showing they add up to 201%. Well, what does that mean? How can you have more than 100%? This reflects their leveraged exposure. So the exposure really is 2.01 times the value of their assets. And this really aligns with their objective of providing 2 times the daily returns of their holdings. So we know from a few slides back that the assets under management were $2.8 million. So through the use of swaps and derivatives and other margin techniques, they're creating this added exposure. They're doubling the exposure, which is worth about $5.88 million to those underlying securities. So this can amplify the gains, and that's what it's doing in this bull market. It's really amplifying the gains. It's absolutely killing, the S&P 500 or the NASDAQ 100 and some of the leading growth stocks. But in a more volatile or in a bear market, it could amplify those losses. So let's take a look at the holdings. And now this is a little bit different. So what we used to see in June, July, and August, we'd actually see those 5 stocks that they rotated in and out, like the Palantir and Meta Platforms and Nvidia and Alphabet. What we see now are the holdings with a hyphen after it, L-Merex. That's a notation basically that says, hey, this is a structured product or note issued by a financial services firm called Merex. And this is part of VistaShare's new methodology. They just started last month. And this really helps them enable a quick stock rotation and also helps amplify the leverage exposure. So they're basically leveraging or they're utilizing Merex to generate these notes, if you will. So the notes are CoreWeave-L-Merex, NVIDIA/L-Merex, Palantir L-Merex, Coinbase L-Merex, and Strategy L-Merex. And then they have some treasury bills, and that comes to a little more than it's actually 204%. That difference between the 201 and the 204 is really the result of the daily rebalancing. The L stands for linked notes or issued by. Uh, and Wild's exposure to CoreWeave is achieved through these Merex-based linked notes. These are customized financial products. They're derivatives, they're swaps, they're structured notes rather than having direct share ownership. which VistaShares used to do with Wild. They don't do it anymore because this is actually better for them and makes it more efficient for them to do the rotation, and it's cheaper and it's actually better for us as investors. Merrick's, you can do your research on them, but they're basically known for creating customized financial services products for liquidity, clearing, and they work with ETFs and other institutional investors. It's kind of interesting. Don't want to get too deep in that. You can research that. What are the benefits of this ETF for investors? Amplified short-term gains. You can potentially get double your daily return of the underlying stock basket, increasing your profit potential for well-timed short-term trades. You have access to the tactical strategies that VistaShares is doing on your behalf. You know, you may be a very bullish investor, especially in today's world, and you're a dynamic investor. Maybe you don't have time or the patience. Maybe you don't have the skill set to do swing trades. This is an opportunity to do that. Easy trade execution. You can trade on out of your brokerage account on this ETF through NASDAQ or the New York Stock Exchange. There's no special requirements. It's very simple. And you know what? If you are an alpha investor, this is the ETF for you. You have that frequent portfolio rotation, and there is a sentiment-driven selection of those 5 stocks, and they are rotated out every single month. And it allows you as an investor through this ETF to target market trends. And also you are avoiding the guesswork. Well, which should I choose this month? What should I choose that month? It's actually saving you time and effort and also brain power. And another benefit is risk managed leverage. The leverage is embedded and limited to your investment. So you can never lose, and I already mentioned this, you can never lose more than your invested principal. Unlike in margin training, you could. So this is actually safer. Optimal conditions, bull markets. They perform best in an environment where the prices are consistently moving up without a lot of volatility. And daily compounding works in your favor, and the leverage amplifies those gains daily. Short-term holds, and that's why there's this daily rotation. VistaShares is not holding these shares or these holdings for a long period of time. Some of them they may hold for a few months, but they're really doing a monthly rotation, and they do a daily rebalancing, and it minimizes negative impact of any volatility drag that could erode your returns over time when there's market volatility. And folks, that is it. I hope you found this to be useful, enjoyable, and informative. And before I close, friendly reminder, as an affiliate partner of Seeking Alpha, I can offer discounts, subscriber discounts to Seeking Alpha's premium subscription, Alpha Picks. And if you want both, the bundle, you can read more about it. Click on the links and the QR codes to learn more. Especially, I like the Seeking Alpha Premium's 7-day free trial. If you don't like it after 6 days, you can cancel and you are not obligated. But I think you will like it. I'm a long-time subscriber to both the Premium and Alpha Picks, and you will get great discounts by going to these links or going to the QR code. And if you are interested in getting access to great insight and additional content around investments and dividend investments, and I don't just do dividends, I do all kinds of investments. I'm on X, I am on Instagram, and I am on Facebook. You can see my handles and the QR codes right there. This video is brought to you by Dividend Blasters. Thank you for your time. And if you found this video to be enjoyable, we'd love for you to give us a like, share the video, hit that notification bell, and subscribe to our channel, Dividend Blasters. Until our next video, have a wonderful day and God bless.